We have a debt deal now that President Biden is going to sign. We're not going to have to worry about this until early 2025. They're taking this off the table for election year campaign season, and it makes sense. It's astonishing how fearful the market was of default, though. Credit default swaps on U.S. sovereign debt rose at its peak to 325. Now, this is the price of an insurance policy against default. So it went up to 325, and within the last few days, it's down to 10. So the fear out there was extreme, and the market is enjoying, the stock market, some of a relief rally associated with that fear going away.
Bitcoin consolidation could end by July. New research predicts as optimism over a BTC price breakout returns. In its latest market update on June 2nd, trading firm QCP Capital revealed a bullish bias on both Bitcoin and the largest altcoin. Hello and welcome to Money Talks. In today's video, Cathie Wood, CEO and CIO of ARK Invest, shares her beliefs on money growth, the risks of deflation versus inflation, and why we believe innovation will be perceived as a flight to safety.
Gold has been in a trading range for the last 2.5 years now, and as long as it stays in that trading range, we're fine. I think part of the reason it's moved up from the 16, 17 thousand or $100 range up to the $1,900 to $2,000 range was the flight to safety. Some would say it's fear of inflation, a hedge against inflation. We would say it's more of a flight to safety, much like Bitcoin enjoyed going from 19,000 to 30,000. We have found it very interesting that Bitcoin and crypto generally rallied in the face of a crisis, the regional bank crisis. And that was proof positive to us, at least, that crypto, and especially Bitcoin and to some extent Ether, have become flight to safety vehicles, much like gold. And in fact, it got us thinking about innovation generally, especially now that AI is becoming so important, top of mind, all corporations now, which means it's going to happen faster than otherwise would have been the case. We think innovation is going to be perceived broadly before all is said and done in this cycle as a flight to safety. It's the opposite of the way investors and others have been perceiving it in the last couple of years. They were looking at innovation in a period when interest rates were going up as a problem in their portfolios, because innovation or any long duration asset is very dependent on interest rates. But if interest rates are going down, then they turn from a headwind into a tailwind. So that's good. But this other notion of flight to safety, if and especially in the world of artificial intelligence, if my competitor is doing something in the innovation space, specifically AI, that I am not doing, and I am going to lose, then I need to get there quickly. This is a safety valve for me to innovate at least as fast, if not faster, than my competitors. And AI certainly is bringing that risk and that opportunity to life in a way that we couldn't have imagined in 2014 when we were doing our work on NVIDIA and who else might be the beneficiaries of this very powerful movement.
Bitcoin price has been ranging between $26,000 and $31,000 since mid-March, but analysts are increasingly calling time on the sideways action. QCP Capital is among them, predicting a change of course as soon as the end of the month. This, it argues, is thanks to the United States debt ceiling sideshow vanishing, leaving Bitcoin closely mimicking its consolidation and breakout phase from 2020. With the passage of the debt ceiling bill through the House and Senate that extends the ceiling until January 2025, we can now all move on and not have to worry about any political sideshow again until next year's U.S. presidential elections. It wrote, "This means we now return to our regular programming of proper macro and crypto narratives." For QCP, the price levels may be different, but the underlying behavior is the same in 2023 as at the start of the COVID-19 pandemic. Back then, the Federal Reserve unleashed a giant $4 trillion worth of liquidity, buoying risk assets and ultimately sending Bitcoin to new all-time highs. In March 2020, we were on the verge of a massive price breakdown below 5K when the Fed unleashed the liquidity tap, resulting in an exponential price increase as we approached the halving cycle the following year, quoting a previous edition of its Just Crypto newsletter series. Similarly, in March 2023, we were about to break below 20K on BTC as a result of the banking crisis risk-off, when the Fed again unleashed the liquidity tap to drive us back above 30K as we head into the next halving cycle next year.
I'll say it again. It is shocking to me that the Fed never talks about money supply. I was early in my career when Fed Chairman Volcker was focused on inflation, and all we talked about was money supply. So quite a big difference. So the question now is the Fed going to pause? And we keep getting different stories from different Fed governors and presidents and so forth. If you look at the two variables that the Fed has focused us on, employment, and you look at the headline numbers, including today's, we'll get into that in a moment, you'd say, no way are they going to pause. They're going to keep lifting rates. Employment is too strong. If you look at the details inside today's report, and maybe I will go through that now, you'll see that they may be having second thoughts. While the headline number, non-farm payroll, was up 339,000, I believe, much stronger than the 250 to 280,000 expected. Another number, which is actually a leading indicator of employment, but it's buried deeply into the report, is called household employment. So payroll employment is a survey of corporations. Household employment is a survey of households. And that number was down 310,000, which is pretty shocking to see that kind of a divergence. But it does happen at turning points in the cycle. And it has happened a number of times in the last really year and a half. We've seen the 3-month moving average of the household employment numbers go negative, while the non-farm payroll numbers churn ahead. And what might explain this? In our view, it could be because the payroll employment just counts the number of jobs. Household employment, those workers, some of them are working 2 and 3 jobs at a time. And but they're just one person employed. So it could be that they are losing some of those jobs. We will see. It tends to capture the small and medium businesses more than the non-farm payroll does. And they're the first to lay off people. So that may be what's going on.
So, is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.